In this video, I'm going to share with you a real-life example of how I earned over $2,200 in profit using the wheel strategy. I've found that using the option wheel strategy for part of my option trading is a great way to amplify my profits. If you're new to my channel, welcome. Here you're going to find that I'm publishing videos about small account investing by selling options for income and other wealth building strategies. In this video, I'm going to share a real-life example where I used the options wheel strategy to generate an income of over $2,200. If you're not familiar with the wheel strategy, the easiest way to describe it is that it combines two different option trading techniques. First, you sell a cash-secured put, and that's followed by selling a covered call, and the output of one feeds the input of the other. I've got a video available that explains the details behind a wheel strategy. It describes and explains what it is and how it works. I'll leave a link in the description below. Alright, let's get started. I initiated this wheel strategy on January 14th of 2021 with a starting balance of $2,300. Let's take a look at my account history and open up the transaction. So here's the details for this cash secure put that I sold. It's for stock symbol MARA, and it's at the $23 strike price that expires on January 15th of 2021. Now I'm selling a put, cash secure put. I submitted this order on January 14th of 2021, so the day before expiration. This option contract was filled on the 14th at 8:20 a.m. Pacific time. It paid a premium of 44 cents per share. And so I received a credit of $44 deposited into my trading account. Now let's update our worksheet. So this is on January 14th of 2021. It's for stock symbol MARA. And I sold a cash secure put with an expiration date of January 15th. Now it's one contract with a strike price of $23. And it pays a premium of 44 cents per share. So the total premium I received is $44. Now when the contract got filled, $2,300 reserved for my account and used as collateral, and I also received a $44 credit from the premium that I received. So my account balance is $44, and the amount reserved for my account is $2,300. It's the daily chart for stock symbol MARA, and we're going to focus on January 15th of 2021. So MARA closed at $22.39, which is just below my strike price of $23. So as a result, the shares got assigned to me, and the money reserved in my collateral was used to pay for those shares. And I now directly own 100 shares of symbol MARA. Now let's update the worksheet to reflect the fact that I received the shares and the money that was reserved in my collateral was used to pay for them. So at the close of the market day on January 15th, the conditions for my option contract had been met, so I was assigned the shares of stock symbol MARA. So the money that was reserved in my account as collateral was used to pay for those shares, and I was directly credited with 100 shares of that stock. Now that I've been assigned the shares and I purchased them and I directly own them, what am I going to do next? Well, the next thing for me to do as part of the wheel strategy is to use those shares and now sell a covered call. So here's my first covered call transaction using the shares of stock I just received. We can now take a look at the transaction details by going to my account history. Here's the transaction here. Let me open it up. And we can see this is for selling a covered call for stock symbol MARA with a $42 strike price that expires on February 12th of 2021. I submitted this order on February 11th, so this is a one-day option contract, and it got filled that same day at 7:13 a.m. Pacific time. It paid a premium of $1.50 per share. So I received $150 in premium as a credit deposited immediately to my trading account. Here's the daily chart for symbol MARA, and we're going to focus on February 12th of 2021. Stock symbol MARA closed at $38.46. Now I had sold a covered call with a strike price of $42. So this covered call expired worthless, and I end up keeping my shares, and I also keep the premium that I was paid. Now I'll update the worksheet with the information from this transaction that occurred on February 12th. You can see that I sold a covered call for stock symbol MARA with an expiration date of February 12th, 2021. Now this is a one-day contract, and the strike price was set at $42, which paid a premium of $1.50 per share. So when this option contract got filled, I received a payment of $150 deposited directly into my account, and so now my new account balance is $194, and I still retain ownership of the 100 shares. So at this point, I decided to sell another covered call using the same 100 shares. I would just pick a different expiration date and choose a new strike price based on the current market conditions. Let's take a look at the transaction details for this trade by going to my account history. Here's the transaction. Let me click on it, open it up, and we could see that I'm selling a covered call for stock symbol MARA with a $51 strike price that expires on February 19th of 2021. Now, I submitted this order on February 18th of 2021, so the day before, so this is a one-day option contract. And it was filled later that morning at 11:09 a.m. Pacific time. I received 30 cents per share as premium, and when this contract got filled, a deposit of $37 was credited to my trading account. This is the daily chart for symbol MARA, and let's focus on February 19th of 2021. Stock symbol MARA closed at $43.27. Now, I sold a covered call with a strike price of $51, and because the market price never reached my strike price, this covered call expired worthless, and I ended up keeping my shares. Plus, I still got to keep the premium that I received. Next, I'll update the worksheet with the information from this transaction that concluded on February 19th. And on February 18th, I actually sold this covered call for stock symbol MARA with an expiration date of February 19th, which making this a one-day option contract. Now, I set the strike price to $51, and for that, I received 37 cents per share in premium. And when the contract got filled, I received an immediate credit of $37 deposited into my trading account, making my new account balance $231, and I still have direct ownership of the 100 shares of stock. So at this point, I decided to sell another covered call using the same 100 shares. I would just pick a different expiration date and choose a new strike price based on the current market conditions. So I've opened up my account history so we can look at the transaction details surrounding this covered call option trade. Here's the transaction here. I'll go ahead and open it up. And you can see that I'm selling a covered call for stock symbol MARA with a strike price of $36 and an expiration date of February 26th of 2021. I submitted this order on February 25th, the day before, so this is a one-day option contract, and it was filled in the afternoon that same day at 12:51 Pacific time. It paid me a premium of 26 cents per share, so when this option contract got filled, a credit of $26 was immediately deposited into my trading account. Here's the daily chart for symbol MARA, and we're going to focus in on February 26th of 2021. MARA closed at $30.15. Now, my covered call had a strike price of $36. So because the market price never reached my strike price, this covered call expired worthless, and I ended up keeping my shares, and I also got to keep the premium. Next, I'll add the information from this transaction into the worksheet that occurred on February 26th of 2021. So I sold the covered call for stock symbol MARA, and I sold this contract on February 25th, and it had an expiration date of February 26th. So this was a one-day option contract. The strike price was $36, and for that, I received 26 cents per share in premium. So when this contract got filled, I received a credit of $26 deposited immediately to my account. So my new account balance is $257, and I still retained ownership of the 100 shares of stock. So at this point, I decided to sell another covered call using the same 100 shares. I would just pick a different expiration date and choose a new strike price based on the current market conditions. Let's take a look at this transaction by going to my account history, and I'll open up this transaction so we can see the details. So here I'm selling a covered call for stock symbol MARA with a $39 strike price and an expiration date of March 5th of 2021. I submitted this order on March 1st, and it was filled later that morning at 10 a.m. Pacific time. It paid a premium of $1.60 per share, and so when this contract was filled, I received $160 of credit deposited immediately into my trading account. This is the daily chart for symbol MARA, and we want to focus on March 5th, 2021. MARA closed at $30.03. Now, my covered call had a strike price of $39. So because the price never reached my strike price, this option contract expired worthless. And I ended up keeping my shares, and I got to keep the premium. Now I'm going to update the worksheet with the information from this transaction that occurred on March 5th, 2021. So I sold the covered call for stock symbol MARA, and I sold the contract on March 1st, and the expiration date was March 5th. So that makes this contract a 4-day option contract. With a strike price of $39, I received $1.60 per share as premium. And when this contract got filled, I received $160 credit deposited directly into my account, and my new account balance then was $417, plus I still retain ownership of the 100 shares of stock. So at this point, I decided to sell another covered call using the same 100 shares. I would just pick a different expiration date and choose a new strike price based on the current market conditions. Now let's look at the transaction details for selling this covered call. I've opened up my account history. Here's the transaction. I'll open it up so we can see the details. And you can see I'm selling a covered call for stock symbol MARA with a $40 strike price and an expiration date of March 12, 2021. Now I submitted this order on March 9th and it was filled that morning at 10:32 a.m. Pacific time. Now for selling this option contract, I received $1.20 per share in premium, and when this contract got filled, a credit of $120 was deposited immediately into my trading account. This is the daily chart for symbol MARA, and we're going to focus our attention on March 12th of 2021. So MARA closed at $40.70, and I had a strike price of $40. So my shares got assigned to the buyer, and I received $4,000 as payment for those shares. Next, I'm going to add the information from this transaction that occurred on March 12th into the worksheet. So this transaction, I sold a covered call for symbol MARA with an expiration date of March 12th, 2021, which makes the length of this contract 3 days. I set the strike price at $40. And in return, I received $1.20 per share as a premium. Now, when this option contract got filled, a credit of $120 was deposited immediately into my trading account, and so my new account balance is $537. My account currently shows that I still hold the 100 shares, but that's about to change. After the market finishes processing the option contract, my shares will get assigned to the new buyer, and I'll receive payment for those shares. And all activities for this option contract will get reconciled in the next transaction. Take a look here. Now let's look at the transaction where my shares got assigned to the buyer. So I've opened up my account history. Here's the transaction. I'll click on it, open it up so we can see the details. So this is a call assignment where my shares got assigned for stock symbol MARA. I received a credit of $4,000 minus 4 cents to pay for the fees. And so you can see I sold 100 shares and I received $4,000 credit. And the price of MARA at the time of expiration was $40.70. Next, I'll update the worksheet with the transaction where my shares got assigned to the buyer and I received the $4,000 for them. So at the end of the market on March 12th, my shares of stock symbol MARA got assigned to the buyer, and I received $4,000 as payment for those shares. That money was credited to my account, so my new account balance is $4,537. I have $0 reserved, and you can see the number of shares that I own has been updated to reflect that the shares were assigned away. If you like the information I provided to you in this video, do me a favor and smash the like button. So at the completion of this wheel strategy, my net profit is $2,237. And that's a 97.26% profit for my return on investment. So start to finish for this wheel strategy, it lasted 57 days, and I nearly doubled my money. So just a quick recap. I started this wheel strategy with $2,300, and all the trades in this wheel strategy used the same 100 shares over and over to generate a profit. And I generated a profit at every single step. So here are a few of the key takeaways that I hope you understand from this video. Number one, this wheel strategy could be done for any stock that offers options. So for those of you starting out with smaller accounts, wondering if you could do this same wheel strategy with a stock that costs, say, $2 or even $1, the answer is yes. But let me just quickly add, just because you can use a stock for this wheel strategy doesn't mean that you should. A profitable wheel strategy is very dependent upon picking the right underlying stock. And if you pick the wrong stock, this wheel strategy can go sideways or plummet to zero. So there are some specific items you want to look at and analyze for an underlying stock before using it as an option trade for a wheel strategy. If you need help picking stocks, consider joining my Patreon where I offer stock picks every week that are strong candidates for possible option trades. Number two, I treated this wheel strategy as a semi-passive activity. If you followed along with my trades, you'll notice that several option contracts had short duration dates, even as short as 1 day. If I were more involved in managing these trades, I actually would have preferred sell these option contracts with a longer duration prior to expiration. An added benefit to that would be I would gain a higher time value and as a result get paid more premium. Which brings me to key takeaway number 3. I could have achieved higher profits by taking a little bit different approach. And what do I mean by that? Well, I could have been more active in my investing. I just mentioned in the last takeaway that this was more of a semi-passive activity for me. So in this example, if I had sold the covered calls earlier and given myself more time or the option contract a longer duration before expiration, I could have received a higher premium per share, which would resulted in a higher profit. But just to be clear, the option contracts with a 1-day duration were kind of a last-minute afterthought. The fact that I owned these shares and could sell them using a covered call slipped my mind, and I'll explain more why that was in a little bit. Another thing that I could have done was pick a stock with a higher implied volatility. Those of you familiar with the Greeks, this is the Vega component. But keep in mind, higher volatility can mean greater reward, but it also means taking more of a risk. Okay, now it's time for me to address why selling the covered call with the shares that I owned kind of slipped my mind, and I ended up selling option contracts with a 1-day duration. It's because I execute multiple wheel strategies all at the same time. I will typically have 10 to 15 wheel strategies going in place at any point in time. So I'm constantly starting, executing, and closing wheel strategy transactions on a continuous basis. And each of the wheel strategies will have different start dates and be in a different execution phase from any of the other wheels. So it can take a significant amount of time to manage each of the wheel strategies that are in play. And if I get busy focusing on one or two of them, that means one or two of them on the back end are missing out and could end up being neglected. In the future, if there's enough interest, I'll share how I run multiple sector and industry wheel strategies to boost my profits. If you're still watching this video, I just want to say thank you so much. I really appreciate it. And I also want to wish you good luck and lots of success with all of your trades.